Hi, and welcome to this edition of the Insurance Experts. It's my pleasure to have on the line Dawn Crouch. Dawn and I met on LinkedIn actually, and I saw all the things she was posting about proactive long-term care planning, so I had to have her on the show. So thanks for joining us today.
I'm so delighted you reached out, Mark.
Okay, so tell us a little bit about how you got into the long-term care space. When did that start?
Sure. I've been an agent for 15 years, and long-term care was one of my very first products that I sold. At the time, it was a lifetime benefit. It was with a captive company that is no longer selling a product, and I just fell in love with the planning process and how it will change lives both now and later.
Yeah. And I feel like long-term care is an emotional sale almost, right? It's really you're connecting with clients in a different way.
You absolutely become part of the family and really get involved in what they want to see happen and help prevent the things they don't ever want to see happen.
Right. So tell us a little bit about the typical, I know you work in a P&C agency, so how did that come about?
I relocated to the Kansas City area and I was ready to no longer be a captive agent and only sell that one product line. And was given the opportunity to come and work for a family agency that's been here in the area for over 50 years. And they gave me the autonomy to pick the companies that I want to work with and bring my own style of meeting with clients and planning. And running my own department has been fantastic.
Right. And the thing that's very, I'll call it refreshing about you is that most agents, they wait for their client to bring up the topic, but you include it as part of your annual review process. So tell us how you kind of bring this up proactively with clients.
Absolutely. We look after our clients with white glove service and we go over their policies with them every year so they know what it is they're paying for and they know it matches what they want. And as part of that service, we also make recommendations on policies they might not yet have that they should be considering. So it's a fantastic opportunity to educate people even before it's time to buy. And long-term care is something we always mention.
Right. And so what age do you typically bring up the subject of long-term care? Is there a particular point in time?
Yeah, I start talking to clients about it in their early 40s. Now, for a lot of people, they're not yet ready to buy. They may have other financial priorities that have to come first, paying off student loans, getting kids through college. But they need to know that this is going to be something they'll want to consider in the future so that they can plan for that. Most of my clients will buy sometime between age 45 and 60. And I know that's a huge range, but it's so individual when the right time is.
Right. And so what do you think is the plan for a particular person? How do you make that determination?
Yeah, they need to realize that there's an actual risk that if they don't put a plan in place, it would actually affect their families negatively and also their finances. We want someone that is still healthy, and we want someone that's got that room in the budget to reallocate some dollars for that risk.
I see. So awareness of the budget aspect and then being healthy enough to qualify. Out of those three, which one do you think is the most important determinant, in terms of getting coverage?
Absolutely health. You have to be healthy.
Right.
I've seen too many people wait just a little bit too long.
Yeah, and I know you actually had a client story recently. Why don't you tell us a little about this client and kind of the cost of waiting and how it impacted this particular person?
Sure. She is age 47 and her mom passed away when she was young and her father is now in his 80s and she's been providing care for him for several years. So it's right in the thick of providing care and seeing the value of what a long-term care policy would be able to do. So she came to me to apply for a policy for herself. And unfortunately, she had been recently diagnosed with something actually not too serious called Raynaud's disease. And it's going to affect the nerves in her hands and her feet so that one day in the future, she's going to lose sensation and she won't be able to do things like pick up a fork or button a blouse. And because we could see that sooner or later she would be needing help with those things, we weren't able to get her approved for a policy.
Oh, wow. Okay. Was she recently diagnosed or was it something she got diagnosed with a long time ago?
Yeah, it was a pretty recent diagnosis.
Oh, wow. Okay. So she had.
I was just going to say, it's not something that affects her lifespan, so she wasn't thinking it was actually going to be that big of a deal.
Right. So I guess if you started maybe 5 years ago, there would have been obviously a good opportunity to get her a plan. But again, things just crop up that you don't expect. And sometimes it doesn't affect you needing long-term care, but it disqualifies you from getting long-term care, when you really want to get it.
Absolutely right. Life is full of surprises.
Yeah. The funny thing is I know most people wait until their retirement age, right, to think about long-term care. And by that point, they've accumulated a lot of conditions. It sounds like you're actually approaching them a lot younger. So you probably have a lot higher success rate at getting people coverage because they're more proactively planning, right?
I do. I actually get most of my clients approved with one policy or another, and having a lot of companies that I work with absolutely puts that in my client's favor, that if they'll be upfront with me about everything that they're struggling with health-wise, I can
Mhm.
usually find a home for them if we start early enough.
Yeah, and I think I looked at some stats recently, and about 85 to 90% of people in that 40 to 60-year-old range will probably qualify out there if they're proactive enough about working with an agent like you.
Yeah, I'd say that's absolutely accurate.
So there's a few advantages to planning early. Obviously, getting the policy is the most important thing. But what about the financial value? Is it less expensive to get a policy when you're younger? How does that look
Yes,
typically?
absolutely. The rates are based on the age at which you apply. So applying younger is only in your favor. There's only good things that can come from that. I
Right.
often get asked, well, what would be the difference if I waited 5 years or 10 years? So if someone comes to me at age 50 and says, I'm thinking about this, but maybe I'll just slide this into the budget when I retire early at age 60. Well, what would be the difference in waiting?
Right.
And if we calculate those rates, it's often a difference of as little as $2,000 to $3,000 that they'll have saved by waiting 10 years. But they've lost 10 years worth of coverage, and the chance that they've rolled the dice and hope they'll be healthy enough at 60 to even qualify, that's often worth making decisions earlier.
Right. And I guess the other part of that is that a lot of the plans today have that inflation protection on them. So it's 10 years worth of compounding of your benefits. So you're actually getting a better value. Even if you're paying a little bit more in premiums, you probably have a lot higher benefit pool by buying it earlier as well.
You nailed it. Absolutely. That quote for the 50-year-old and the quote for the 60-year-old are the same, apples to apples, but that 50-year-old will have a policy that will have grown for 10 years. There's just
Right.
no factoring that.
Well, thanks for joining us and sharing, this story with us. I know the cost of waiting is probably the number one thing I run into as an issue of, planning too late. So I really appreciate you taking the time and sharing your expertise.
Thank you. Always happy to be of service.